Today there is big news on the debt market funds. Debt market mutual funds have been struggling for a long time now, from the time of the ILFS crisis. After that, the failure of DHFL, failure of Punjab Maharashtra Cooperative Bank, and collapse of Altico Capital have all hurt mutual funds badly. In recent times, Franklin Templeton's shuttering of three funds also made sure that people would avoid debt market funds like plague. Close-ended debt market funds are in serious trouble, trading at big discount to value. There is a suggestion from the Prime Minister's office of some reforms. Let's look at it. Welcome back to Berich. There has been continuous outflows from the debt market mutual funds. Foreign portfolio investors have also been withdrawing money. Corporates have been withdrawing money. Retail investors are fleeing debt market funds. At times, it has been monthly returns have been negative. The PMO has returned to the finance ministry and SEBI asking them to fix the problem. Well, there's only one way you can fix the problem. Most of the dead assets in debt market funds have to be taken out of their hand. Some of the reforms that they have suggested is that the side pocketing, instead of being made on day zero, they should be given 15 to 20 days time to side pocket issues. Like Z Learning did not pay interest and UTI immediately devalued, brought it down to zero. Z Learning went to court and the court dismissed its petition, saying that you have to pay interest. Moratorium is only for the retail investor. SL Group has been in trouble for a long time. To deal with such issues, the PMO wants mutual funds to be given 15 days time. Then it wants somebody to form. It doesn't say who will form the fund. Somebody to form a credit rescue fund. This credit rescue fund supposedly to buy distressed assets in debt market funds, either at book value or at last traded price, which is lower. So basically, if there is an artificial book value and an artificial last traded price, this fund will buy debts and take a loss, and the debt market funds can pay its investors. Basically, what the Prime Minister's office is suggesting is the taxpayer bail out the debt funds, because finally the fund has to be owned by the taxpayer in one way or the other. So basically, he wants to take the taxpayer tax money of the retail investor, route it through a fund, and say, I have bailed you out. This whole issue is psychological, and this is something similar to the recapitalization bonds tried by Arun Jaitley, which was an accounting trick and did not work. The public sector banks badly needed recapitalization. Neither the center did not want to let go of the banks, at the same time had to provide capital. So they hit upon a novel idea. The banks would borrow money from depositors. That money would be given to the central government as by subscription to bonds. Bonds would be subscribed by the public sector bank, and the same money from the bond would be called a capitalization bond, and money would be paid back to the bank as fresh capital, kicking the can down the line. So if a 10-year bond is being subscribed to by a public sector bank, then the recapitalization of PSU banks has been kicked at 10 years into the future by the finance ministry, just being paying the interest on those bonds. These are various accounting gimmicks. What is being attempted now is also an accounting gimmick. Basically, force RBI and SEBI to create a fund which will buy all the dead assets in the debt market portfolio. Retail investor can take the money, and after 5 years, the fund can return write off a loss, and the loss will be borne eventually by the taxpayer. Instead, we should have bold reforms in the bond market, forcing corporates to go off banks and borrow in bond markets. Bond markets will teach the companies to be disciplined, because there is no NPA. The moment the bond market gets a whiff of trouble in a company, the value of the bond will drop 50% and nobody will finance these companies. The cozy relationship, the bank manager, bank chairman, slash the corporate owner has to end. Companies have to be allowed to go bankrupt and bankruptcies have to be handled. These kind of solutions are the way for the future where the market has to take care of bankruptcies. The Prime Minister's office is meddling in areas on which it has no expertise. And finally, the taxpayer has to bear the burden. Thank you for watching Berich. If you like the content, hit the like button, press the subscribe button of my channel, and turn on the bell notification. If you want to buy the Kindle version of my book, use the link below. If you want a hard copy, send a message to the WhatsApp number given below. At the very end, if you want to get in touch with me, send a mail to berichenglish@gmail.com. Thank you for watching Berich.